What's going on, guys? I want to do some training, kind of showing you guys the thought process, why I put some of these stocks in the watch list and what you should be actually looking for and how you guys can play them and take advantage of these particular trades. Now, not all the time am I going to put in, Tesla and Nvidia. I watch those stocks day in and day out, but as I'm scanning through the markets, looking at different setups, what I'm looking at is stocks that are coming off the bottom, stocks that are continuing a breakout, stocks that are pulling back into supply. And I want to show you this BABA trade that ran for around 90 cents, almost $1 from the entry pivot. Now, what we are looking at here is BABA's 1 day time frame. So what I'm looking at here, see a little bit of a double bottom. I see that BABA has been working its way off the floor. And what I'm looking at here is a lot of supply and demand zones that it's been taking out. But if we kind of look to where we tested yesterday, we tested this 200-day moving average, which is here. Cross-reference this on your personal daily charts. I want you guys to see this. I want you guys to start understanding it so you know why there was potential in this trade and how you should approach this trade. So look at yesterday's price action. Look how we tested the 200-day moving average as well as the 100 EMA. Okay, so put those two moving averages on your chart and look at how we tested that price action, and we pulled right back down to the 50-day moving average. Now, if we look above, okay, so let's see how congested this is here with all of this, all these moving averages, how you got one crossing here, another one crossing here. What does all that mean? Just forget about that. What we are looking for here is space. What I want to see is supply zones, which in this case is our moving averages. I want to see those be tested and I want to see them be taken out. And when and if they do get confirmed, is there enough room in there for me to take a trade? Now, position sizing is going to be key. If you're playing one contract on Alibaba and you take 80 cents, you might only make 40, 50 bucks. You might only make $30. Might not seem like a lot, but if you're sized appropriately, 10 contracts might be 200, it might be 300. 20 contracts might be 600, might be 800 on an 80-cent move. So you have to be sized correctly and you have to understand how much room is there in the trade for me personally. So if I was to look at this chart here, and when I put this into the Discord for everyone to put on watch, at $89.20 mark was the level. Why was that the level? That was the level because yesterday that was our high wick. And if you see, that was the same level that took out the 200 and this 100 SMA EMA here. So what we're looking for to have happen today is we just need to sit back and wait for this price action to confirm. Now, look at our next level of supply. Was this rising Bollinger Band here that's kind of just going sideways at around $90.68. So that becomes our profit taking potential. Does not mean that we need to touch that price. So I'm not waiting to sell at $90.68. What I'm looking to do is get in on the confirmation over yesterday's highs, not just any stock you can do that on. Make sure you have room in the trade. In this particular situation, we had room in the trade and we're taking out a big level, which is a 200 SMA on a daily time frame. That's a significant level. So as we start to take out that 89.20s, 89.30s area, I want to get long, okay? Immediately, I want to get long off this breakout here, and I want to be selling into the next supply zone. Again, focus on what I said about 2 minutes ago. We don't have to touch the supply zone. We never have to touch the demand zone. We want to be like a kindergartner in grammar school, a preschooler. We want to paint inside the lines. Remember when they told you, let's just paint inside the lines? Let's keep it inside the lines, right? Yes, sometimes we go over and break the lines. Of course, we're not all perfect, just like stocks are not all perfect. These moving averages are not, it's not a concrete block wall. It can kind of go through it. Think of it more so as like a rubber band. If we were to stretch a rubber band and you put your finger against a stretched rubber band, yes, you're going to feel some resistance, but can you bend it? Of course, right? So think of moving averages like that. We want to be selling into the bend, into the stretch, not trying to run into it like we're running into a block cylinder wall. Okay, so as this confirms, we want to get long and we want to be selling into the next supply zone, and it ran for 80-90 cents, almost $1 off the entry. Now if we were to look at the 5-minute time frame here, okay, if we look at the 5-minute time frame, you're going to see here this, where's the price point we're looking at here? You can see the 89.20s area here. Okay, so this is the candle that confirms. You can see nothing but airspace, right? Nothing but airspace ahead here besides the, the riding Bollinger Band that's kind of just going higher with the price action and your rising 5-day moving average. So what you're looking to do here is take out that 89.10, 89.20s, 89.30s, and once we get that breakout, you want to be diving into this candle here, diving into that. Now you may be asking, well, where's my stop loss? Your stop loss is going to be when we close below a 5, 10, or 20-day moving average. Now you may be sitting there thinking and asking yourself, well, how do I know which one I need to get out on? Well, that depends on your risk tolerance. That depends on, are you looking to scalp? Then you maybe want to get out at the 5-day moving average, meaning that if you want to get in this trade and out of this trade within 5, 10, 30 minutes, then use the 5 SMA as your stop loss. If you want to kind of ride this trade maybe 40 minutes, an hour, 2 hours, then use the 10-day moving average. Now, if you were just to use either one of these moving averages as your indicator to get out when price action closes below, you would have essentially ridden this all the way up to a price of around $89.55, which was only about 25-30 cents from your entry. But you can see here that we hit a high price of $90.10. So with that being said, that was about an 80 to 90 cent move from the entry to the overall top wick. Now, how would you have known to sell at the 90s? It all comes down to experience. You have to kind of know, what do you look for when you get a trade? When I get into a trade that, is trading between $50 and $100, $50 and $120, if I can get 50 cents, that's great. If I can get 60, 70, 80, 90 cents, $1 out of a stock that costs under $100, I'm going to take that 90% of the time and leave a runner. My runner will be stopped out on a close underneath the 20 SMA if we don't break and make a new high. And that's kind of typically how I run my trades. Now, if you took one contract and you got in and you only made 40 cents on the trade and your trade's only up 15 bucks or your contract's only up $18, it doesn't seem like a lot, but that is a win. Times that times 10. If you had 10 contracts and you took $18, 10 times 18 would be a $180 trade in a matter of 30 minutes. Now that can be life-changing money if you can do that 1-2 times a day, if you can do that multiple times a week, if you understand that just because we broke out and we confirmed yesterday's price action, here's what I want to stress, and I'm going to drive this home on each and every single one of my training videos. Just because we get in here over that 89.20s, 89.30s doesn't mean that we're just going to hold this all week. It could, but it doesn't mean that. So a lot of times a day trader or a scalper, especially a new one, will try to make swing traders profits, swing traders percentages in a matter of 10, 20 minutes. Now, what that means is you'll look at people that post, that they made $3,000 or $4,000, $5,000 on a BABA trade. They've been in it for 3 or 4 days. But you don't know the level of drawdown that they had to sit through. You didn't know the level of time that they had to sit through. You didn't know what their expiration is on these contracts, right? So what I'm trying to say is, if you're going to be a day trader and you're going to be a scalper, you got to be okay with taking 50 cents, with taking 60 cents, with taking $1 out of a stock that cost $100, right? If you're looking for $2, $3, $4, $5, if, for example, you're looking for BABA to get up in here to the 90s, it very well could over the next 2 weeks. Now, identify, are you a scalper / day trader, or are you a swing trader? Because if you are a swing trader and you're looking for that $10 move, you're looking for that $5 move, then your stop loss is very clear. It's a close below the 50-day moving average. It's a close below yesterday's low. That's it. If you want to swing trade, you have to use previous day's low as your stop loss. Now, people are going to start to think, well, I don't want to give myself from 89.50 down to 87.15. I don't want to give myself a whole $2 worth of risk. Well, then you're not cut out to be a swing trader, because technically speaking, A swing trader cannot get out until we take out a previous day's close. That is what it is. And if you want to use a tighter stop loss, then you're more than likely looking for a day trade, because technically speaking, I have to stay in this trade until we take out and close below a previous day's low, until we lose a level of demand. And as of right now, yes, Alibaba is off the highs. It is back at your original entry price. You would probably be down on contracts now if you didn't sell on the 80-cent run up, right? But technically speaking, the trade is not broken. You need to start understanding the concepts of the difference between taking profits and stop losses on someone who's looking to scalp, on someone who's looking to hold a longer day trade, typically over 1, 2, 3 hours, and someone who's looking for the bigger move, which is going to also come with more time. It's also going to come with bigger drawdowns, and it's also going to come with bigger losses, but it's also going to come with a lot bigger wins, which is swing trading. So identify where you fit. If you fit in where you're comfortable taking one contract and taking $5 on a trade setup that takes 1 or 2 weeks, that's completely fine. Just understand that when you do get into a trade and you do go green, and now you're sitting in you're in drawdown, or you're red, or you're back to break even, doesn't mean that you're in a bad trade. It doesn't mean that you did anything wrong whatsoever. It just means that you need more time for your trade to play out. That's all it means. I wanted to give you guys a little bit of an update on how I'm finding these stocks and what I'm actually thinking and the thought process behind it. So just understand, if you're playing a $200 stock, a $300 stock, and you can get $1, take $1, take $1.50, take $2. If you're playing a stock that costs $50 and you can take 30, 40, 50 cents, take it. If you're playing a stock that's $100 to $150 and you can get 80 cents, $1, $1.20, take it. Now, if you want to make more money on those particular plays, you increase your contract sizing. If you're playing options, you got to buy more contracts. That's how you make more money. You don't make more money by playing 2 or 3 contracts and holding for $10. You make more money by playing 10. You make more money by playing 5. If you normally play 2 contracts, play 5. If you normally play 5, play 7. If you normally play 7, play 10, and then gradually increase your position sizing as your account grows. But also make sure you understand that as you increase your sizing, a bigger level of emotions comes with that when you are in drawdown and you do have to cut those losses. Many times traders, they size up too quickly and they can't stomach the emotional drawdowns, and they start cutting trades on bigger losses when they don't necessarily need to. For example, I've been trading the same size, which is around 10 to 15 contracts now for over a year. It's been about 1.5 years, 2 years. I have not sized up, even though my account size would allow me to permit to size up. It's just that I'm comfortable with those gains. I'm comfortable with those losses. So I'm going to continue to keep my account sizing the same. I hope this video helps you guys. If you guys are interested in learning how to add an extra $1,000, $2,000, $3,000, $4,000 to your overall kind of monthly revenue, and you're looking for that extra step, you're looking for that extra strategy, you're looking for that extra one-on-one coaching, you're looking to get involved in trade with other traders who are doing this, make sure to join evolutiontraders.com. Also join the Discord. That link is down in the description box below, and I'll see you guys on the next video.